Well, what's going on, guys? Welcome back to Let It Grow Investing. I'm Jeff, and thank you very much for being here. We've got quite a bit of bad news to talk about, right? We had a rough week on the market, but hopefully we can get out of that here soon enough and get back to that rally for the latter half of the year that we've really been talking about, really been hoping for. And I think a lot of people have kind of been expecting, right? So last time I did talk about the fact that what was the episode last week? What did I write that it was? Calm before the storm. I think that's exactly what it was. I was kind of thinking this might be a bad week, and yeah, the NASDAQ was down 5.8%. The S&P was down what? 3%, 3.5%, something like that. And man, it was brutal out there, and a lot of different things were not going our way. We had more sell-off in a lot of those tech names. We had more negative news out of Broadcom. We had some negative news on U.S. Steel. That sale was getting stalled from the White House, which I actually agree with. I think that's probably a good move. It was going to be sold to a Japanese company. And they essentially said, hey, no, that's not going to happen. And I think Cleveland Cliffs might actually buy some of that business as well. But U.S. Steel was down. The ticker is X if you'd like to take a look. So a lot of different things there. We had some more bad news out of Dollar Tree, Family Dollar. One of them already reported. The other one reported this week. Things looked weak there as well. So they were saying that the households with above $125,000 went from a want to buy to a need to buy. So they're not really spending money on other things, but just really the essentials. So more slowdown there, more slowdown in jobs numbers on Friday. That was a big reason for the sell-off on Friday. Man, Friday was rough. Thankfully, I was working and I wasn't really tuned into it so much. So I really didn't have to just watch account numbers just dwindle down. But definitely a rough Friday. So hopefully we can give a little bit of clarity as to what's going on with all these different things, what we're expecting on the rate cut front, where that's actually going to head, and potentially where we go from there. So yeah, first up, I know last time we were looking at options. I was having a little bit of a problem showing that on the web browser for E-Trade. Like I said, I normally just go through my phone. So I tried to pull it up on here, and I'm going to share my screen as how you would write a covered call on E-Trade. And this is definitely one strategy where you can analyze what's going on here. So this is just on Tesla. Current price being 210. This would be a buy right covered call strategy. So we'd be buying this 100 shares at 2, and I'd have to take. Oh, this is actually the bid. All right, so this is the current bid. This is where we closed on Friday. So this is current price 211.46. We would be buying those shares in between the bid and the ask, and we would be writing the covered call. This is based on Friday's contract and a sale at 212. So basically buying them and selling them for $1 higher on Friday. The premium that you would be getting is $5.85 to $6, depending on where you're buying these and how much you're actually, no, the strike price is already there, $212.50. So it really depends on the spread here between the bid and the ask. And yeah, you would be getting I always try to write my covered calls for that ask price. But some people, if you're really just looking to get this premium and sell out of the shares, you would be fine with getting the bid price. But I normally set a limit closer to the ask to get a couple more dollars out of my covered calls. So again, yes, this would be $600 or $585 in premium to write this call. But that essentially lowers your buy price down by that $6. So you'd be able to be in these for $205.66. And then should it hit $212.50 on Friday, close of business, you would be selling those 100 shares at $212.50. Otherwise, they would be held in your account, in your portfolio for a longer duration. You could essentially hold these long term, or you could continue writing covered calls on them above 205 to make money on them going forward. Now, if you wanted to, You could write that covered call at 207. You could write it at 208, and you would still be getting a premium of about $1 or $3 if you're selling them at 208, 208.50. If you sell them at the covered call price at that strike at a later date and time, you would still be getting the premium and then still be making money on the sale. So hopefully that helps. This one, you can analyze it this way, and it'll tell you the probability that they would sell on that given date and time. So if we did this, this would be, how can I do this here? So this would be underlying price at 207. If I move it up to where were we? 212.50. I can do that. 212.45. That's pretty close. So this would be a 45% chance that it would close above 212.45 on Friday. So fairly probable that you would go ahead and sell your shares on Friday. But this is definitely nice to see just how this works. What's the probability? Hey, if I wrote a covered call out to 225.80, on Friday, what are the probability that I would actually sell it? Well, it's about 17.5%. So you're going to get a less of a premium, but you're also going to have a less of a chance of selling your shares in Tesla, and you would be getting more profit if they would sell. So for me, I really don't want to always sell some of these stocks that I'm putting onto covered calls. Like I had the one written for Broadcom at 177.50 that expired on Friday. I did not sell those shares. I didn't want to sell the shares. I just wanted to get a little bit more money in premium for doing so. So I made $135 for writing that covered call 1 week prior, holding on to my shares that I already owned, and collecting the premium, but not selling the shares, not selling the underlying shares. Sorry, I got to turn off my cameras here. They're just going to keep on chattering because everyone's outside and running around. So yeah, that's kind of in a nutshell what we're looking at here. But you can go through on E-Trade. Oh my gosh. And you can trade around whatever stock you're looking for. However you want to do this. Say we're looking at Broadcom now, right? AVGO. We're going to add this in. We're going to see just what the options market looks like on Broadcom right now. So if I go back up to covered call, let's just run through another one, right? Price type, we're buying it right now, 136.59. Last price was 137, but the ask right now is 136.59. And then say I wanted to sell these at, oh man, there's a good amount of premium just for Friday already, $380. So say I wanted to sell them, but I only wanted to sell it if the shares get above $150. Well, I'd only get about $37, but I'm guessing that the probability is very low that they're above 150 come Friday. So if I slide this up to about 150, we're at 136. If I go to 150, you'll see on this graph that it's going to be very low probability that they're going to sell for that price. 150.05, that's close enough. So 5.3% chance that they close above 150 on Friday. Is it always accurate? No. Is the market crazy? Yes, it is. But you can see here as to really what that standard deviation looks like on this curve, as to what the probability is that you're going to sell your shares. So again, if we lower this back down and say, hey, if it gets above 140 on Friday, I'm selling them, that would be $242 in premium, your 240 times your 100 shares up here. And then, hey, what would that actually look like? It would be 140. I'll slide this over real quick just so you can see this. And this is probably right on the money. Probably not as good if you're just listening to the podcast, but if you are on YouTube, you're getting a little bit of education as to what's going on here. So 35% call it chance that you're going to be selling your shares for $140 this coming Friday. You'd get $242. Your cost basis would be $134.24. So you'd be selling for $5.75 higher. So you'd be making the $242 and then your $5.75 for selling at $140 versus your cost basis. Sorry, no, that includes that. Sorry, we're taking that out. So you'd be getting $5.76 per share for buying the shares now and writing that covered call for Friday. So yeah, that's one way you can make money on it. And say you wanted to own these long term, like I said, you can slide your strike price higher to make the probability of a sell lower going forward. But if you're simply just trying to collect premiums, you could obviously write these for a much lower price point, and then just be getting more in the way of premiums for writing this covered call going forward. So that's what I got there. Hopefully that helps a little bit explain just how this is done, how you're going to be writing these, and then a couple different ways to analyze the actual trade itself as to what's going on out there, and really kind of get a knack for how I can tiptoe into options. Covered calls are a great way to do that. And if you already own the shares, even better a lot of times, because you probably have a cost basis that's lower. Or, I wrote one on PayPal where I was just like, hey, if it gets above 80, I'm out, or whatever the price point was. PayPal's just been rough. So that is kind of what I did. That's another way to get a little bit of income, kind of like a dividend, for simply writing the covered call onto these positions that you already own, and make a couple bucks off of them. So that's covered calls in kind of a nutshell. Well, what's going on, guys? Jeff here with Let It Grow Investing, and I wanted to tell you guys a little bit about First Form. First Form is a supplement company that I've been using for a long time, and they'll definitely help you get on your path to your fitness freedom and your the goals that you have for building a better you. So that whether that's building muscle, cutting weight, whether it's hair, skin, nails, anything else that you're trying to really improve on yourself, get yourself in shape. For longevity, for peace of mind, for cognitive support. They've got a product for pretty much all of it. And it's some of the best products that I've used. I've tried everything over the years, and I keep coming back to First Form because it works. So if you want to help me out, help support the podcast, you can go over to firstform.com. That's one STPHORM.com/let it grow, and check out some product, and see what can help get you on your way to those fitness goals that you've got set for yourself as well. So again, be sure to use my link, Let It Grow, at firstform.com. But yeah, we talked about the Kroger Albertson's deal. I wanted to take a look at that. That is up for this week as to what's going on there. I really haven't paid so much attention. I probably should have. But yeah, we pull up KR, and I think this one's trading a little bit down. Everything was down Friday, though. That's not really fair to say. We are at 52.27 day range. Yeah, we're at the bottom. We're in middle of the road here for the 52-week range. A couple people saying that this might not, that the drama's heating up. That's probably a good way to put it. So yeah, that's potentially on the docket for this week. PE's fairly low. Dividends okay. Nothing really screaming to run out and buy this one, especially as people are really focusing on the essentials, maybe not the extra ice cream and the expensive vitamins at the grocery store or whatever. Maybe they're not looking there, but they're just trying to get the essentials and keep that grocery bill at a reasonable number. I don't know that everyone's simply just stocking up on ramen noodles at this point, but you get the drift, right? We're trying to cut back on that spending because it's just so out of control. We're also watching the Fed, and really what the Fed's going to be doing. This is kind of off topic of what E-Trade is doing for us. So I'm just going to kind of bring this up real quick. The Fed is looking at a 50 basis point cut at the September meeting. I will try to pull up the CME group and just see how this chart is looking for us. So a lot of people are saying, yeah, 50 basis points is what we're looking for. But what does that signal? A lot of people are really pointing to the fact that with labor numbers slowing down Friday, this is actually going to be a 50 basis point cut because we're trying to avoid a recession. And that is definitely on top of a lot of minds when it comes to just what we're doing going forward. Actually, you know what? It doesn't actually look like we're, when I pull up the actual chart, I've heard a lot of people saying that we are simply trying to avoid a recession by going 50 basis points, but we will actually see here. We've got CPI coming out on Wednesday. We will see what that means to us and see just what that looks like. But when I pull up the CME group, right, this is for the September 18th meeting. We're looking at a current rate of 525 to 550. And if we cut rates, it's looking like 70% are saying that we're only going to get about 25 basis points and 30% saying we're going to go to 50 basis points. So I think there's a little bit of talk on the street that we might see 50, but I don't know that that's actually going to happen by looking at this. I think it's going to be more of a CPI thing. How bad are jobs looking in 10 days? What other news we get in that time frame? So I don't know that it is a done deal yet either way. I think we're going to take a little bit more of the picture into focus, and then we're really going to make a decision from there as to what we do. But yes, if we do go a little bit heavier, I think that the Fed is taking a lot of that into consideration. And I think that they're trying to, cut rates quicker so we can reinvigorate some of the spending that's out there. So again, jobs slowing down, jobs added on Friday was lower than expected. That definitely hurt us. And that is one of the reasons that the market really sold off. So if I do go back and share this tab, let's take a look at just what the S&P did. We'll look at Friday, but we're also going to look at the week. This is the 5-day. So we were up near 5650-ish roughly. And this is always very hard to look at because I try to get close to it and it goes away. And now we're sitting at 5,408. And if I go over to the NASDAQ, man, 2.5% down on Friday. That was brutal. But yeah, over the course of the week, man, it was even worse than that. We were, up near 17.7, call it, and now we're down about 1,000 points. So yeah, it's about 5.6% over the course of that 5 days. So what happened? Well, let's take a look at Broadcom. Broadcom, AVGO, huge in the chip space. Well, they guided lower for Q4. We saw more demand on non-AI chips bottoming out. The demand is very low. Everyone had a surplus. Everyone restocked, and now demand is low as spending is slowing. So trailing 12-month PE is ridiculously high. I'm sure that going forward, that is going to be altered. This is one of the ones that I think is going to be a screaming buy. Oh, man, and it's hard for me because I've had this one for so long. My cost basis is so low. But now I'm really thinking that as demand starts to turn around, we're really going to have more in the way of Broadcom going forward. You got 26 different analysts saying that we have an average price of about 198. That's 45% up from here. I mean, all the buy ratings came in on Friday. They really did. There's really no reason not to buy more Broadcom right now. I think that going forward, this is going to be such an essential company. It's going to piggyback a lot off of what NVIDIA does as far as price action goes for the shares. And a lot of 200 price points, a lot of 190s. These are 175 looks like the low, but even at that, you still got such a upside, right? We're up about 40 points from here. And man, I think that's the low. I think that is the new low on the street is 175. And we got a 170 from Wells Fargo, but do we trust Wells Fargo? I'm not too sure that we do. I just personally think that it's a great company. I think going forward, it's going to be such an essential, and I think it's getting a lot of pin action on what happened with NVIDIA, what's going on with the actual cycle. People are selling it off because it's weak right now, but AI is still surging. We're getting a lot of upside from that. And I think a lot of other demand is going to come back in for Broadcom. So I think right now, if you've got a long-term horizon, I think it's a safe buy. That obviously do your own due diligence. This is not an endorsement for Broadcom. This is simply what I'm probably going to be buying this week. I love the stock. I probably got into it because the dividend was strong and it was growing when others had such a low dividend. Yeah, I mean, it's 1.39% now, but when I bought it, it was probably in the 3s or 4s. And I mean, my dividend's still strong. And as the price has gone up, the dividend has not kept up with the share price. So this dividend actually was raised 1%. It's now 53 cents per share. Not a big change, but it is worth noting that they are ones that look to pay more going forward, and I think that's going to continue. Even as they're off peak cycle, they're still looking to raise it, and I think that will continue going forward. So we've got a lot of people saying that this is a buy. I'm thinking long term it's a buy. I've had it for quite a long time, and I'm happy to add more. So and I know it keeps flashing with I was trying to see my cost basis. Yeah, my not to really put all my stuff out there, but my cost basis is $6,700 and it's worth $26,000. So we're doing okay there. So I think for me, my cost basis would be, maybe about a fifth of this dividend of where I actually bought the shares versus what they're paying now. So my dividends probably 4 or 5 times higher in as a percentage. Granted, I'm still getting the 52 cents per share times my share count. But I do believe that they're going to continue to pay more and the stock is going to continue to rise. So I am comfortable with this one. I think it's oversold. I think a lot of people are panicking on a lot of NVIDIA news, which was actually good news. I think a lot of people are pulling profits. I think end of the year, September, you've got a lot of seasonality, a lot of sell off in September. September is just an awful month for the market anyhow. And we were already talking about the fact that the market was going to sell off last week. I wrote this covered call for Broadcom at 177.50, thinking strictly that it wasn't going to get there because NVIDIA had a double beat and raised guidance, and they still sold off based on the fact that Blackwell chips might not be as have much of as surplus of supply as they originally said. And now they backpedaled and said that they have more than enough supply, and they still sold off, and they're down near 101 now when they were 127, 128 before they reported. So I really didn't think that Broadcom could do much better than a double beat, raise guidance, buy back $50 billion of shares. And, if they didn't, I thought they were going to go down. So I wrote the covered call. I probably could have wrote it a little bit tighter. I think they were 165 when I wrote it. I wrote it for 175. But again, I did not want to sell my shares because I believe in them long term. So that was very long-winded on covered calls, Broadcom and NVIDIA. But that's what we got there. SMCI. SMCI continues to go down. Still with the investigation talk. SMCI, let's pull this one up. What is this now? 380 something. And I remind you, this was somewhere up near $1,200 a share. Let's take a quick peek at this one. Yeah, we're looking at 380. Come on. Give me back over there. 386.46 is where we close. After hours, we went down another dollar. EPS, man, that looks fair. Price earnings at 20 on trailing 12. That looks fair. But yeah, we're being investigated. We got some pending class action lawsuits. That's boilerplate type stuff as far as I'm concerned. When you see all of them are just investigations and lawsuits, man, I don't know. That's a tough one. I sometimes think it's just a little overdone, but nevertheless. So yeah, we've got a decent amount of upside here. It's just, do you really want to play this one when you could play someone else that's not being investigated? I'd probably go another route, but I'm not going to blame you if you think that, hey, this is really oversold and it shouldn't be down here, and they were on the up and up. Yeah, there's about 63% of upside here. So I could see starting a position now, but at the same time, I would probably be buying something different. That's just my 2 cents. I'm not going to start a new position on something that's in the midst of a lawsuit. And that's just not something I'm really looking to go after in my investing right now. So I really don't want to play these swings of companies that could be, should be, but haven't. So I'm going to stay away from it. I just wanted to bring it up and say, hey, it's out there. That's definitely one that changed hands a good bit this week. We talked about X. Let's take a look at it, though. I do want to take a quick peek because I really haven't paid attention to it. That is United States Steel. Actually went up Friday. That's probably only because it went down so much on Wednesday after Biden was blocking the deal for the Japanese investors to be buying U.S. steel, potentially parting it out, potentially moving headquarters to Japan or elsewhere. So if we look at this on the 5-day, come on, bring it up. There it is. There's that drop. We went from 36.53 down to 26.97 in the matter of within the day. It was brutal. So again, I agree that United States Steel and the people that we get all of our basic materials, our building steel from, shouldn't be held foreignly. I think it should be held here. So I really do agree that the sale should be blocked. I think it brings up a bunch of weaknesses, similar to having all of our pharmaceuticals being produced abroad and then shipped over here, and then we didn't have enough during COVID. I think that we probably shouldn't outsource all of our building materials to another country. I just can't see why we would do that as a country in a whole. So yeah, we've got Cleveland Cliffs looking to potentially slide in and scoop up some of the parts or help out and buy some of the business. And let's just see here. We got a good amount of upside. I don't know what's going to be happening for this one, though. I don't know if a lot of these were written, and this is only 5 ranked analysts. That is really not enough for me to really feel comfortable about. We've got Jefferies, BMO, Morgan Stanley, JP Morgan saying it's a hold at 40. Man, I don't know. This is definitely something that I think is worthwhile. I really don't know the long-term play here. I think that short term, we're going to get some volatility. I think it could be a good trade. I really don't know how this looks long term because we really don't have all the pieces of the puzzle yet. Is it going to be blocked? Is it going to be bought up by Cleveland Cliffs? Is it going to be held government funded? What's the play? So I don't want to say that I'm going to get into it, but I do think it's noteworthy as to what's going on with this and just how that's going to affect our prices of getting steel from other areas or other countries brought over here when we need to do business and we need to make new things. So I do think it's very, fundamental for our society to have our own building materials in-house and not really rely on other countries and companies. So that is definitely something I'm concerned about. But what do we do here? I think for me, it's not something I really want to hold, but something that I feel that we should know what's going on in that space. So that is what I've got there. We were looking at Dollar Tree, Family Dollar. I had some different notes here. Adobe is coming up this week. What is Adobe doing? Now, I already sold out of this one. Simply because the upside was looking a little bit limited, and some of the prices, I really didn't know how many new customers we were going to add. They were leaning into AI. I like what they're doing. I think a lot of people are going to use it to create new videos, new Photoshop, and all things AI. I think that's going to be a great way for a lot of people to really be content creators. And I just really am questioning how much more upside they had here. So we're at 563. We traded down over the week from like 585. Analyst research, I'm guessing it's fairly flat, maybe 6%. What do we got here? About 9. Okay, so we might have got some new buy targets. Yeah, we did on Friday, right? We got actually quite a few. 650, 6.25, and 650 all on Friday. Oppenheimer on Wednesday coming out at 625, and Barclays on Wednesday coming out at 675 as well. So a couple new price targets that are going to be higher. I still think it's a great company. Don't get me wrong. I do think it's a great company. I just redeployed some of that money into some of the stocks we were talking about last week. Civitas, Viking, which I still think is going to be a real winner with some of these new weight loss drugs that they are coming out with. I still believe that is a good play. About 110% of upside there. So I am still building a position in that. We got well, these are actually older price targets. So these should have already been baked into the stock at this point. But that's what I got there. So this week we were looking at, unless I got something else that I can come up with and tell you guys about, we were looking at 5 different names. We were looking at Enphase. We were looking at Occidental, which is OXY. We were looking at Sentinel One, which is the ticker S. Target for our TGT, and Delta Airlines, DAL. I will be adding $200 worth of my own money to Sentinel One for week 37. Now, this is on Webull. If you were looking to get started on building an account, building a side account, a trading account, whatever that might be, feel free to use my link to get started over there on Webull. we've had pretty good luck building out a position over the past, 2.5 years at this point. And just simply by adding $200 every week into a stock that we have been looking at on the weekly episodes here on Let It Grow. And like I said, I do a lot of my research on E-Trade, but Webull does have a pretty solid research and basis for what they got going on over there as well. So that's there. If you want to get started on E-Trade, there's links for that. There's other links in the description to help get you going as well. Now for week 38, we're going to get back over and take a look at what's going on for week 38. First up, let me go ahead and share my screen again. Let's get back over to that. Share the screen here. What do we got? Go back to E-Trade and share this one. So first up is going to be UPS. Well, yes, things are slowing down for a lot of spending, right? We've seen that from a lot of different retailers. We've seen that in a lot of different markets, but I still think that internet sales are going to continue to drive. I still think a lot of people are still going to lean on UPS for a lot of the selling, a lot of sales that they make, whether it be eBay or whoever else, however you're buying. I still think that UPS is going to be strong. Seasonality going into the holiday season, UPS is going to be strong. We've got about 5% of dividend yield. We've got a decent price earnings on the trailing 12, which is about 21. Earnings per share, they're making good amount of money. So I'm comfortable with that. And again, your earnings, your 6.14 times, your 20.79 should get you close to about 127.54 if these numbers are accurate. Again, your earnings times your price multiple gets you back up to your price per share, or simply divide it back, and that's how you can multiple or get your PE multiple by your price divided by your earnings, and that gets you back to your PE. So yeah, that's going to be number one. I still like the dividend. I still like the company. I think they're a premium operator. They have been a strong track record of doing good business, and I really think that this dividend yield is really something you can lean on right now, and know that you're locking in your shares at that 127 mark. You're getting a solid dividend, and I think long term we should continue to see UPS do well. Yes, this 12-month price target at 143, it gives you about 12% of upside. You put that back with the dividend of about 5%. You're north of 17% in upside on UPS buying it right here, right now. Yeah, someone says it's about $100 stock. I don't buy that. I don't think things are going to get that bleak out there that this gets down to 100. Morgan Stanley saying 100. Wells is saying 134. Bank of America 132. TD Cowen at 144. Yeah, so I'm holding this one. I've been building a position. I'm comfortable buying this one. We bought this one this time last year on Webull, and I do believe that this is going to be a long-term hold for me, especially at a 5% dividend yield. Number two, this is another chip name that's more in that commodity chips and memory and storage. Micron. Man, I haven't looked at Micron in a while. I looked at, I want to say it was Tip Ranks, and I actually had an article. Where did I put my phone? I know I sent it to myself. Now I turned off the cameras. Put it in the drawer. I might do a quick read through on the email that I sent myself as to why Micron is undervalued right now. And you can see here, right, 93% of upside from 27 analysts. We just heard from Broadcom that demand has bottomed. We're really looking for this thing to come back strong. On the low end right here is a 140. That is the low. That's still 62% up for Micron, right? And I mean, their PE is historically just dumb cheap because it's more of a commodity chip maker, not one of these custom design chip makers. So PE, I know they had a rough last year, right? A lot of the demand had gone down. So that PE might not even be there because it might not be profitable right now. But I do think that cyclicality of this business is going to come back. And I think that we're going to have more demand going forward. And all these different analysts tend to agree with that. So I'm thinking that this could be a good buy. Let me see. Yeah, where was this? This was actually from barchart.com. After a tough 2023, semiconductor market has been recovering strongly, driven by rising demand across various industries and excitement around AI. We've got the strong fundamentals for the PHLX, the semiconductor index. SOX has been corrected by 10% over the past 5 days. Why Micron, though? Micron has gained about 21% over the past 52 weeks, on pace with the S&P 500 SPX returns. However, MU has pulled back 45% from its June highs of 157, now trades flat year to date. Priced at 4.61 times sales, trades at a discount to many of its large cap semiconductor peers, such as Texas Instruments, TXN, the TI-83, the calculator we all had to have, and AMD. With its new price tag, Micron continues rewarding shareholders, paid a quarterly dividend of around 11 cents. Annualized payout about 46 cents per share with 0.51% yield. They have a 28.87% dividend payout ratio, so super low. We always look for companies that are paying less than 60, sometimes higher, especially if they're REITs. Some of those cash cow dividend companies, think Altria, MO, not MU, MO for Altria. They're going to be paying more because that is really the state of the company that they're in right now. Is think Verizon, think AT&T of years past, pay out more in the way of dividends and be that safe haven for a lot of dividend investors. So Micron beats Q3 beats Wall Street projections. They had expectations blowing past Wall Street's expectations with 81.6% revenue surge to $6.8 billion, driven by strong demand for memory and storage in the booming AI space. Adjusted earnings rebounded to 0.62, a massive jump from last year's $1.43 loss, topping forecasts. It was fueled by Micron's success was fueled by Micron's focus on high margin products like high bandwidth memory, raking in over $100 million in HBM3E revenue with impressive margins. Superior performance and energy efficiency cements Micron's leadership in the market. Data center revenue also hit record highs. So a lot of different things here for Micron, but they still plummeted 7.1% on the news of inline revenue guidance for $7.6 billion. Investors wanted more, similar to NVIDIA, similar to Broadcom, but we're still seeing a lot of demand growing for the sector, for chips, for storage, for all things memory. So I'm really thinking that Micron could be a safe bet going forward. We've got Mizuho raising up to 145 from 140 on this news. We've got a lot of people saying that this could really Mizuho. This is weird. On August 28th, Mizuho cut to 140, and then on September 6th they raised it back to 145. So they flip-flopped there. Micron maintained a buy by Needham. So again, a lot of different people saying this is going to be strong. I think the cyclicality of the stock should start to rebound. I think we're going to do a little bit better in the next 12 months, especially as rates come down and more people build out more of that AI demand that they've got on the books. So that's going to be number 2. Number 3, Broadcom. I had to throw it in here, guys. I think this is just a stock that I feel that I should own it long term. I already have. And at a 10% drop, I'll probably be buying more tomorrow. And let's see if we want to add this one for next week as well, for week 38. I'll be potentially buying this on the 9th. That would be the 16th. But man, I think I already laid out this one. We covered this one enough. I think going forward, there's a lot of reasons to go ahead and buy. I forgot I wasn't sharing my screen. Broadcom. I really think there's more reasons to buy this one right now. As things have plummeted, they've got down to the lows. The demand on Broadcom, non-AI chips, has bottomed. Yes, they guided down for Q4, but I believe that it is going to be up from there. I really do. So I am looking to add more while this thing is down, and I think it's going to be a shorter turnaround than a lot of people expect, because I don't think that NVIDIA is going to stay down for long either. I think one of them is going to start rallying. I think that NVIDIA could get down in the low 90s again. If things really go south, if we get some more bad news out there on the economy, maybe upper 70s on NVIDIA. I said that to a buddy who's doing a lot of heavy investing into NVIDIA, and he's like, there's no way. I'm like, you told me that at 125 that we weren't going to 90, and that just happened. So it could happen. It could happen. I don't know that it's going to, but I feel like if we do get some bad news, some slowdown here, there, anywhere, some black swan type events, I think we could hit 70s again and try some of those numbers back from April. But Broadcom, man, I'm comfortable buying it here. If it goes lower, I'll be comfortable buying it there. I think it has got a strong runway going forward, a lot of growth in revenues and numbers going forward. Same thing with Micron. Those numbers for revenue growth by next year, man, I want to say it was triple digits. I forget the actual numbers. I could pull that up, but you can take a look at the actual revenue growth for Micron for 2025 and beyond. So that's what I got there. Number 4, Salesforce. Man, I've got to throw this one back in there. They're really leaning into AI for a lot of things, customer management, and I think it just makes sense. It seems to be a great way for them to grow their business. A lot of people are really leaning into more and more AI. I think on a customer management type basis, it's going to help companies grow with less involvement for more staff. So there's about 26% of upside here. The downside's fairly limited at 236 from 38 different analysts. We've got about 44% at the top. And I think it is a safer bet with some of the changeover that they've had going on over there with CEOs and different problems. But now we're getting past a lot of that. I think that we're getting to a space where them leaning into AI and really putting those plans into play is really going to help others. And as rates come down, more and more businesses are going to lean into how can we make more with less people. And I think Salesforce and implementing more AI is going to be a way of the future. So that's going to be number 4 for me this week. Number 5, I don't even have to backspace that far. CRWD. Do we do it? Oh, man, I don't know. This thing dropped again. I know I said lower 200s, but man, we're looking at a decent amount of upside, right? We've got about 32%. I think this week it could go down more. I just have a feeling that this could be a rough week out there. So I'm hoping that if we do pick this one, we could see this with a 230s, maybe a 220 handle on it. And then it starts to make more sense for an entry point for us going forward. So CrowdStrike, all things security, web security. And yes, that one update sent them plummeting, a month ago? Was it more than a month now? Yeah, it had to be more than a month ago. What was it? End of July? It had to be. So yeah, we were up in the 380 range, and I think I had a sell side limit order on this up near 400, and it didn't get there. It didn't get there. So I think I sold a good amount in the 308 range, I think it was, and then I completely sold out of it around 270. So now do we get back in when it's in the 240s or 230s? Again, hard call. I still think that they're one of the best in breed. I think that they had a big hiccup that caused a lot of heartache, cost a lot of cash. I know they're going to be getting some lawsuits. I know they're going to be having some problems, but have they sold off enough? Man, I don't know. I think a lot of analysts seem to think that this is a good time to go ahead and buy this one. And I don't know how low they go. I really don't. But we got 39 analysts saying that we've got about 7.5% of upside on the low end. We've got a high price on the street of 420, which is about 70% of upside. That average right here is at 32% of upside. So do I feel strongly about it right now? I feel like this is probably more of a speculative play, a turnaround play. And I don't know that I'm going top 10 position on this thing, but I feel like we could go ahead and nibble at it and be okay with making that decision going forward. So not going to be a top holding for me, not right now, but maybe we start to build a little bit and take that risk. I think it's a bit of a calculated risk here. The downside is fairly limited. We know that there's going to be problems. We know there's going to be lawsuits. But I do think that they're one of the best in the breed. They're the all-in-one security web security, cloud security company that's out there. And I would be okay taking that risk. I think that's what the bottom line here is for me, is I would be okay with it. So that's what I got this week, guys. We've got those 5 names. We've got UPS. We've got Micron, which is MU, Broadcom, AVGO. We've got Salesforce, CRM, and we have CrowdStrike, CRWD. We will be watching for some different earnings this week. We're going to be watching what the CPI says on Wednesday. We're going to see what the Fed remarks are about that. And really, we're going to be watching what they say next week at that meeting next Wednesday. Do we get that 25 basis point cut, or do we go a full 50 bips? That's what I got. Please let me know what you think of this one in the comments. Please get your vote in for the stock of the week. This is going to be week 38. I will be buying one of them regardless, but I really want to know what you guys think. There are no wrong answers. I already narrowed it down to 5, and if one of those is wrong, that's on me. It's not on you. So please go ahead and let me know what you think of these 5. Where you want to go. Do you want to go for that dividend play, or do you think that the chip space is really oversold? And or is AI really going to run away with a lot of these gains? And that would be strong for at least 3 of these, and potentially all of them, really. So that's what I got. Thank you guys for stopping by. Be safe out there. Try to build up some cash for these down days that we've been having, and invest wisely. So thank you guys for stopping by. I'll talk to you on the next one. Take care.